The Reserve Bank has yet again hiked the repo rate in its bid to bring inflation under control. The Monetary Policy Committee hiked the repo rate by 75 basis points to 6.25%. Now, this pushes up the prime lending rate, the rate at which banks charge their customers for borrowing, to 9.75%. Now, this means that if you have debt, you'll be paying more for the money servicing your loan.
If you have debt, the financial road is about to get bumpy. Your loan repayment will go higher. The Reserve Bank is trying to control the high inflation that has been above its target bracket of 3 to 6% for some time. The central bank says risks to the inflation outlook remain on the upside. This as a result of the effects of the Russia-Ukraine conflict pushing up oil prices. Electricity and other administered prices also remain upside risks. The bank's forecast for headline inflation for this year is unchanged at 6.5%.
What we do know, what is detrimental to the economy at the moment, is the rising cost of living, which is depicted through inflation. And that failure to deal with inflation now would be detrimental to the economy down the line. And that is what our focus is.
For indebted consumers, this is bad news, but for those with savings, this means they will be getting more in interest.
Those that are net borrowers, in other words, they have debt, whether it be vehicles finance or car debt or mortgages. Over time, the hikes in interest rates will accumulate and the impact will start to affect the demand for credit.
The central bank expects the local economy to grow by 1.9% this year, down from an earlier 2%. It says the negative global shocks and load shedding continue to create headwinds to growth.
Over the last 3 years, we estimate that the power shortfall has clipped growth by approximately 1 percentage point per year. This year, given that the power rationing, the power shortfall will eclipse anything we've seen over the last 15 or so years, it would not be fetched to assert that we will see the GDP outlook clipped, as I've suggested, by maybe 1.2, maybe even 1.3 of a percentage point.
It's expected the Reserve Bank will likely further hike the repo rate by about 50 basis points at its next meeting in November as it continues to tame inflation. SABC News, Johannesburg.
Right, to chat to us a little bit more about this, we're now joined by Meleney Berry-Kriel, who's the CEO of the Viva Foundation, a non-profit organisation that deals with the socio-economic aspects of people hardest hit by rising repo rates and the high standard of living. Thanks so much indeed for joining us. Welcome to the programme. So, July up 0.75, now up 0.75, and this makes it the two largest successive interest rate hikes in 20 years. And I suppose what that means is that we're in for a lot of pain.
We are indeed. And, the poor bears the brunt in the truest sense. In many different ways. So food insecurity is the most worrisome. There is a decrease in demand for food and non-food articles. And this change in consumption behavior where people have to literally choose to eat less and also less balanced food and less quality. So it's basically equates to hunger where you and we might have a bond, and this 1,000, 2,000, 3,000 rand difference forces us to look at what luxuries we have to forfeit. Unfortunately, one of the luxuries that people forfeit is employing people in the informal sense, where the housekeeper, the gardener, and people that maybe in restaurant industry. So these informal employees, they are the ones that then have to work less. They get told, okay, you can come twice a week, not every day. And so where we can choose what luxuries we can forfeit, the poor have to choose how many meals we can eat. So this also leads to this development problems. Children hungry in school cannot perform. It widens the chasm of poverty and inequality in our country. But yeah, there's also other impacts. That change in consumption behavior is also a change in purchase power. Ironically, the poor is a significant contributor to the economy. So they don't have a lot of money, but there's a lot of them. So lots of South Africans live in informal settlements, live in townships, don't have a lot of money, are not working close to their home. So there's this enormous burden of transport costs to get to work. And the informal sector, the small business, even corporations, I'm thinking the beverage industry, they depend on this massive amount of consumers that now have less purchase power. So it's a vicious cycle. And, you know, the payment performance of the poor changes. They can't service their own debt, and their debt is furniture, school clothes, things like that they can't then pay. Clothing, they can't pay their monthly accounts. They can't afford daycare. Now, daycare is early learning. And once again, they have to choose. If I'm only going to work twice a week, I have to keep my child at home. And so there's this lack of development in the early learning stages, and which then also puts the poor and the underprivileged child at a disadvantage. He will end up, or she will end up, going to school without being properly ready. And we see it. This problem with school readiness is a house of cards built on the sand. By the time you get to the third and the fourth grade, this child who didn't have proper early learning and early childhood development begins to fall far behind. It leads to our high matric failure rates. So we look at our matrics and we say, okay, you know, you had 79% pass rate, but we should look at how many children started school. And then that percentage is very, very low. In other countries, even African countries, when you start school, you finish it. So here we start and only 34% of children actually end. And these are all knock-on effects with poverty. I think for me is one of the most worrisome outcomes or impacts of this stress on the communities is the domestic violence, is alcohol abuse. Alcohol becomes the most affordable recreation at 10 Rand a pint. 10 pints is only 100 Rand. We know that there's nothing we can do on a weekend to relax that costs 100 Rand. So this increase and this escape to alcohol and the frustration of unemployment and poverty, keeping adults at home in contact with children, it is unfortunately a very serious problem. Obviously, domestic violence is not confined to the poor, but we do see it. The frustration of unemployed people at home, the stress, and then added to the fact that alcohol is the cheapest way for me to escape this trauma of unemployment, that then it flows out into domestic violence. This leads to unrest. Communities, there's a high community cohesion amongst underprivileged people, more so than in affluent neighborhoods. An affluent neighbor doesn't even know the surname of the people that live down his street, whereas in underprivileged communities, there's this cohesion. We know each other, we feel the same. There's maybe less personal volition, where I won't write a letter to the council when my trash doesn't get picked up. I don't really act in my own interest. I act as a community. And when this frustration boils over, and there's no recourse, the poor cannot take somebody to court, cannot fight these huge forces that they feel so helpless against, then it leads to the violence that boils over because the whole community has this frustration, and we begin to act like a community, and we begin to express our frustrations as a community. So there's a lot of worrisome impacts and knock-off effects. But I think at the end of the day, the worrisome one is that people are actually going hungry.
It is quite a thing to watch, and I suspect there are other behaviors that will come through. One, as people in a household become unemployed, the one person who still has a job, his burden to look after everybody increases. He doesn't have enough money, and so he can't get money through the formal lending system, and it starts to go to these informal lending systems, which can be quite problematic in the end. So that another whole cycle of indebtedness that's much more dangerous plays out.
Absolutely. That's loan sharks. There is not a high level of sophistication where we understand the pitfalls. When you're under so many the temptation is to go and get money from a loan shark. And if those are the interest rates on that, I mean, it's just absolutely ridiculous. It's 33%. So in many cases. So this is really, as you say, the pressure. Also, we must remember that a lot of people that live and work in cities and informal settlements, they live there to work in the city, they send money home. A lot of families in the rural areas will designate one family member for higher education. So out of siblings, maybe only one or two are allowed, or they can only afford to send one or two to university or to college. And there's an expectation that that person must send money home. And so you see there, even those that are employed, if they are if there's anyone in that family that loses their employment, the pressure just increases. And unfortunately, speaking of grants and increasing a grant because people are suffering, it is actually just a plaster on this problem. It soothes the conscience of the grant maker, where we feel, and even an employer that feel, okay, I can't employ all these people anymore, but at least they're getting grant. So, I mean, a 500 Rand grant or a 700 Rand grant is nothing against a 5,000 or a 10,000 Rand job. And this is the problem. We cannot feel that, okay, at least there's a grant. That grant is utterly inadequate at the moment. At 350, try and go to a supermarket and buy 350 Rands worth of food. There will be maize on the table for the whole month and nothing else. Unfortunately, that is what worries us the most.
Meleney, I wish we could talk for longer, but sadly we've run out of time. But thank you so much indeed for helping us understand this other side of this interest rate story. Thank you so much for your time. All right, that's
thank you. It was an honor.
Meleney Berry-Kriel, who's the CEO of Viva Foundation, a non-profit organization that deals with the socio-economic aspects of people hardest hit by rising repo rates and the high cost of living. And up another 75 basis points, up from the 75 in July. And this is the biggest successive jumps in the interest rate cycle for 20 years. All right, let's carry on.